Hi guys, my name is Tom Gordon. I'm a tutor with the Brunswick County Literacy Council. I'm a financial literacy tutor there. Our council, along with the Kiwanis Club of Shallotte and the Brunswick Family Assistance Group and many of the local banks, have come together to bring you the FDIC Money Smart financial education program. Today we're going to be in the second chapter, which is called Check It Out. Maybe just tell you a little bit about myself. My personal background: I worked for one of the big three credit bureaus for 20 years. So I worked with the top banks and credit grantors in the United States. Then I worked with one of the top risk companies that provides protection, fraud detection around depository risk, money laundering, check hiding, fraud for the top 200 banks in the world. And now I am a recruiter in the fintech space. So I basically work with companies that provide products that are ancillary to the banks, that use advanced analytics to provide convenience and speed and new products and innovation in the market. And they'll come up in our discussion today. So Venmo, Zelle, Cash, all of those are fintech companies. And we'll weave those in to our discussion today because probably most of you use one of those products. And we'll talk about it and how it relates to your relationship with the bank and your relationship with the checking account. The first chapter of the program is called Bank On It. And I thought we would just do a little review today of some of the things that were covered in that. So I think some key things were what's required to identify yourself when you open up a bank. We're going to cover that today specifically for our checking accounts. But basically based on your age and what you were allowed to have from a particular bank, kind of speaks a little to the identification, but you're going to need a couple of photo identifications like a passport or a driver's license. You can get a government issued ID, and you need a secondary identification, could be your social security card, student ID, something like that. If you're between 16 and 17 years old, you can get a limited student account with just about any bank. And then if you're 18 to 24, you're starting to move into regular checking and all its full features. And then you can start to become credit card account holders. Today, we're going to focus on depository accounts, or checking and savings accounts. In Bank On It, we went through choosing a bank, and banks are not all the same. They're not all right for you. So you do need to do some shopping. A little example would be you want a bank that's convenient for you. And if you have an ATM card, you want to make sure that your bank's ATM network is close to where you live and it's convenient. If English is not your native language, you want to make sure you have a bank that has staff and material that is in your native language. So things like that. You want to personalize that choice. We'll talk about FDIC insured accounts today as we get into it. The checking account, but you do want to be with an institution that is federally insured. There is a difference between debit cards and ATM cards. We're going to cover that again today. There is a cost to working with a bank, and we're going to talk about fees. The monthly statement comes into play in large part after you put money in a bank and you've used money from your account throughout a month. Is the bank right? And did you keep your own personal records to see if they match? And we'll talk about doing that today. And as with anything, someone can get part of your ID, your student ID, your driver's license, show up to a bank, present themselves as you, and try to open up an account in your name, but it's not you. So we'll talk about fraud in regard to creating a relationship with the bank as well. Here's a little cartoon. It's not so important that you can see all the details on it, but it's a young lady. She's babysitting, and the parents are staying out really super late, and she knows she's going to get a big fee that night. Unfortunately, when the parents come home, they don't have enough cash to cover the fee, so they've they've asked her if it'd be okay if she wrote a check. Oh my, she doesn't have a checking account. So today we're going to cover some of the objectives around checking accounts, the benefits of it, determine which checking account is best for you. It's kind of like a bank. Once you get inside the bank, there's also more than one choice for your deposit relationship there. Identifying the steps involved in opening up a checking account. I'm going to go, how do you add money and take money out of your checking account? And reconcile a check register with the bank statement. I'm going to take you through it, and you'll choose your own habits as you go forward after that. But we'll talk about what most people really do. And then I've been given some questions from students, and I will be trying to answer some of those as we go throughout this presentation. So a checking account, and we should just transpose that word with deposit account, because this is a paper check. You've probably seen one. You may or may not have a checking account. We're going to talk about the use of this, but it's really, if you didn't have the paper, you would have this phone, and it would serve as pretty much as your modern day checking account. We'll talk about that. So you're going to want to put money into that account. If it's not yourself, it'll be an employer, the federal government. You're going to want to take money out for its use. You need to pay bills. You need to pay debts. You just need cash sometimes. And then you need to write checks or use a debit card to pay for things. And we'll talk about each one of those. It's pretty convenient, particularly these days. There is a brick and mortar bank. You can go in, see an account manager there. You can interface with a teller if you need to, but these days you don't spend as much time in the physical presence of a bank as maybe it was 20, 30, or 30 years ago. But you do need to go in one time, and we're going to talk about that in a minute. And after that, it's from time to time. So usually with your ATM or your debit card, your phone, you can get access to your money and use it with the bank without really going to a physical bank. There is a cost to it, so we'll talk about fees. They do account for your money of what's in your account and what's coming out of your account, fees they're charging you, deposits that you've made, and they do it every day. You can check the status every second of every single day. Most people don't. But then at the end of the month, you can get the whole thing in a position where it's called a statement, and you can kind of see what do your records look like versus the bank. And the bank offers you safety. And we'll talk about, we're going into it right now. The FDIC's the Federal Deposit Insurance Corporation, and they're insuring your depository accounts in the United States. This is kind of the very next thing. So this is a site that you can go to. It's the FDICinsurance.gov, and it's the EDIE site. And basically, they're letting you know how well your deposit accounts are insured. If you have one account and you don't have over $250,000, you're probably in great shape. If you have 4 or 5 accounts, you can load all those accounts into this site, and it'll add them all together, apply the insurance that they provide, and let you know whether you're properly insured or are you underinsured with your distribution of your deposit account. So it's pretty handy, particularly over time as you collect more and more accounts in your name. So as a student, say you're not 18 years old yet, you're going to look for you don't need everything that the bank can offer you. You're just getting started. So you need to start this relationship with the bank. So you're going to look for free or low cost checking, or in some cases, maybe you don't need the paper checks yet. So maybe you have a checking account, but you're provided only with an ATM card, which kind of puts you in a cash world of putting money in, perhaps with an ATM, taking money cash out through an ATM. But for your life, that may just be just fine. Regular checking is a full-featured checking relationship with a bank. As you become 18, 19, and getting into your college years, that becomes more important to you because you need banks for more things. And then if you want to get a little return, you get a interest-bearing or money market type of checking account. It does give you some return on having your money there, but they come with limitations perhaps on how much you can withdraw and how often and so forth. So you want to take a look at things like that. That it's not really an investment vehicle. Most major banks today will steer you towards their wealth management or their investment side of their bank if you're looking to get real returns on your money. We talked about the relationship with the bank is not free, but it's the more you use, the more fees can come into play. So pay attention to fees. You don't want to be surprised. You open up an account in the first month, you get your statement, and there's all kinds of fees that you weren't anticipating. Well, don't let that happen to you. Today we'll talk about some of these fees, but discuss those up front when you're opening the account, and get the account that's right for you, that you can afford. So there can be a service fee for handling your account, providing the statement, making it available to you online. For most student accounts, there's not a monthly service fee. So ask those questions. Some require you to keep a certain amount of money in the account to keep it open. It's called a minimum balance fee. Ask about that. It could be $25, it could be $200. That's a big difference. Here's one we're going to come after twice today, the ATM use fee. I'll hit it quickly. When you go to get an ATM card or a debit card, and you go to one of those ATMs in your bank's network, there may be, for a student, or perhaps it'd be a low fee or no fee. However, if you see an ATM and it's not your bank's ATM and you go there, not only is your bank that issued the card going to get charged you a fee, so is the bank that you're taking money from going to charge you a fee. In round numbers, figure it's $2.50 per bank. So every time you take money out of a foreign ATM, it's $5. So if you're only getting $10 out, it's costing you 50% to withdraw that money. So that's why when you decided on your bank, you want to make sure the ATM network is convenient to you. If you write a check for more money than you have in the bank, it's called an overdraft. And say you write it to a store, we'll call them a merchant, and they try to cash your check and there's not enough funds there. That check will be returned by their bank to your bank, and your bank, for handling that, will charge you an overdraft fee. We'll talk about those fees and how you can perhaps protect yourself against those, but those fees will come. And if you continue to do overdrafts, those fees mount up very quickly. And if you create overdrafts intentionally, it's against the law. And we'll spend a little more time on that. If you write a check by accident, if you put the wrong amount, if you were unhappy with a product, there's a variety of reasons why you would write a check. So give it to someone in the mail or directly, and you want to stop it. You can ask your bank to stop payment on that check, but they will charge you a fee for every time that they do that. So we went over this already. When you're opening up an account, they're trying to get to know you. So you know these IDs we've covered, a couple of photo IDs, driver's license, passport, and a secondary ID, Social Security, student ID, something like that. And they probably want you to come with an initial deposit to open up the account. The account verification process is very important. Here, the bank, you're trying to create a relationship with the bank. They're not required to open up an account for you. They open up accounts with people they're comfortable with. So you want to come with all your identification material. You want to know that you're going to be a responsible customer. This identity you're bringing is helping sure no one is trying to steal your identity when opening up your account. And they also use an account opening or depository history account. Sometimes it's called a negative file. And this is where, if you've had relationships with other banks and you've had insufficient funds, returned checks, those are called NSF checks. That means a history of writing bad checks. They may refuse to open your account, or they may charge you much higher fees to have an account there, or put limits on your use of that checking account. So all this happens in your first meeting when you're opening up that account. That's why it's very important to do. One more thing, and I'll show it to you later. They're also going to get your signature at this visit, and later on we'll show you where that signature starts to show up on checks and other documents, and the bank is going to refer back to this initial signature they capture from you to ensure, sometimes to ensure that it's you that's presenting a check for cash. What are you going to get when you open up the checking account? You're going to generally, they send you this little set of things, an ATM or a debit card, a checkbook, a check register. This is the check register. It's where you write down the date and amount and who you write every single check to throughout the month. And then of course, most banks do offer you online banking today. When you're adding money to your account, there's a lot of ways to do it. You can go to a bank, there's a teller there, check or cash. You can send a deposit in by mail. You can go to an ATM and directly deposit one or more checks. You can deposit cash. And today, and most of you will be doing this, you can take a picture of a check that's given to you by your phone with your phone camera and deposit it directly into your account without going anywhere. When you go to a bank or you mail in a deposit, they require a deposit slip. Some come with your checks. They have them available in the bank. Basically, it's got your identification, your name, address, and phone number. And it's got the bank's information where it shows zeros at the bottom. That's your routing and transit numbers. I'm going to talk about that. And your account number. That ties you to your bank, its location, and to your specific account that's there. Paper or not, those numbers become important throughout every transaction that you do with your deposit accounts. If it's cash, it's kind of an example of a deposit ticket. You're depositing $30, and your ticket will reflect that you made a total deposit today on March 22nd of $30. Looks just like that for a check. Here's one for $50. You had $200. You made a deposit of $230, but you made a deposit of $50, but you wanted to take some cash back at that time. So you're taking out $25, so that depletes your $50 down to $25. So your total deposit that day was $25. Here's the signature again. On the back of a check, there's a little line, and it says, like here, do not write or stamp below this line, but they want you to write your name there. Pretty much the same way as the signature that they have on file. And this says for deposit only. So once you write that on a check, no one else can take that check and cash it. It has to be used for a deposit because that's what this signature line is for. And if they try to sign your signature and the bank thinks it's a little bit suspicious, they'll hold it for a second, they'll pull up your signature file. If the signatures don't match, they won't cash the check. Again, if you're going to mail in a deposit, you have to do it with a deposit slip. Never put cash in the mail. If someone notices it's cash and they take it, it's just gone. If you have a job and your employer does direct deposit, you can have them put your pay directly into your checking account. Or if you get a tax refund or something from the state or federal government, you can have those put directly into your accounts as well. If you haven't, I'm sure you've been to an ATM either on your own or with a parent or a friend. The real estate is pretty easy. There's a screen, which you're used to working with. The way you activate the screen is you put in your ATM card here, your debit card. You come over to this keypad, you punch in your PIN number, which is a secret code. Then you start to give directions on the keypad. If you want to deposit a check, you put it into this deposit slip. If you want to receive cash back out, it's going to come out down here. They almost all look exactly like this. To take money out of your account, of course, you can write a check. You can use the teller service with a withdrawal slip. You can use a debit card. You can use the ATM. You can use a mobile app. I'm going to talk about those like Venmo, Zelle, Cash. There you are actually, they're tied to your checking accounts. So they're going to be moving money out of your account. In that case, you're probably going to be paying for a product, or you're going to be paying a friend or a relative. When you write a check, make sure you have enough money in the account ahead of time. Otherwise, that the overdraft thing will come into play with it, and the insufficient funds. Complete the blank spaces on it. Just look at a check. It's easier. It's pretty simple. Got the date, the payee, pay to the order of. We'll show you an example. Over here, this is a strange thing about a check. It's been around a long time, but in the little square box to the upper right, you're going to write the amount numerically, and on the line below, you're going to write it in English. The one in English trumps, but you have to actually do both of those. Again, the signature needs to match what's on file. In the memo, you could have bought a T-shirt that day. You just put for T-shirts or know the name of the store. It would kind of look like this. It's just the exact same example. Now you're starting to see these numbers in the lower left. These are your routing and your account numbers that track it to your bank and track it to your account. Here's a question that I received from a student. Aren't paper checks old-fashioned? And they are. Paper checks are old-fashioned. They've been on the decline for the past couple of decades, but they do contain the routing number to the bank where your money is and the account number for your deposit account in your bank. And non-paper-based usage of your checking account use these same numbers. So whether it's paper or a phone or a debit card, it's all tying into your account using the same two identifiers. A checking account, as we discussed, begins your relationship with the bank. And believe it or not, there are times when you will still need to write a paper check. Down payment on a car, they might require a check. Buying a house, a deposit for an apartment, car insurance. This you'll see all the time. If you haven't noticed already, you soon will. Once you have a checking account, a local store may not accept credit or debit cards because they're charged a transaction fee. When they do that, so you may start to see signs that say check or cash only. And if you don't have the cash, they're going to look for you to write a check. Just need to be, it comes up every now and then in your life, so it's good to know how to fill out a check. We talked about overdrafts, so the check, you're right, if you do write an overdraft check, it is returned to your bank and there's a fee tied to that. You can protect yourself by making an agreement with the bank. You can tie it to a savings account, so if your checking account is insufficient, they will draw the difference in funds from your savings account. You can tie your savings account to a line of credit. This is when you create a separate relationship for overdraft protection with your bank. So you're basically in those two things, just enrolling in an overdraft program. Here's another question from a student. Does a bounce check or overdraft of your checking account affect your credit score? This is a good question. The answer is not directly. Banks do not report NSF checks to the three big credit bureaus. You've probably heard of their names: Experian, Equifax, and TransUnion. All the credit grantors in the country, banks and retailers, all report your credit performance experience to all three of these major bureaus. But they do not report NSF checks to the three credit bureaus, so that doesn't affect the credit score. However, they do report it to the check verification service companies, and that's what was used in your account opening. Remember when they were going to see if you had any other experience with a deposit account, or if you're at a store and you hand them a check, they're going to run it through a little reader. That's going against this verification service. It's called a negative file. And if you have a history of insufficient funds, they're probably going to decline your check. So it does have a negative impact on you, even though it's not reported directly to the credit bureaus. Other ways to withdraw money. Again, we went through the teller. I think we've gone through the ATM sufficiently. Today, you mostly live in an electronic world with your bank. The ATM is very convenient. It's all electronic. You can actually have your bills paid, say by your cell phone company. If you want them to go ahead and pay your cell phone bill directly from your bank account, you can set that up. So it's paid on time, no late payments, very convenient. Online banking is what you'll do mostly. You can do it on your laptop, iPad, cell phone, and then cell phone banking. It has almost all the same features, maybe a few less as a computer. There is a difference between ATM and debit cards. They sound the same and sound like they could be used interchangeably, but not really. If you just have an ATM card, then it only works in the same network as where those retailers or merchants are using the same network as your card, which is tied to your bank's ATM system. The debit card, though, can be used anywhere that Visa or MasterCard or Discover networks are accepted. And so kind of the debit card is way more useful to you if you can get one, and you can pretty much take it with you wherever you go. You can use it for online payments and things of that type. An ATM card is much more limiting in the value that it can provide to you. If you lose your card, let the bank know right away. Here they're recommending get them to them within 2 days. You're kind of going to know if you've lost that card. If you notify them right away, they'll stop that card, they'll cancel it, they'll send you a new one. If you go a week or whatever and it's used a lot, you may be responsible for up to $50 of unauthorized purchases. Also, while they're replacing your check, they may put a temporary hold on that account till they get you reconcile what was fraudulent or used while it wasn't in your presence, and then also replacing that card. It takes a day or two. It's pretty quick. You can. We talked about paying your bills through electronic bill pay. Cheap, easy, never late, but the money comes right out of your account right on time. Just be aware of that before you sign on for that. Cell phone banking, we've talked about. Your bank more and more is using SMS text messages to send you little notifications. They may be alerting you that a larger amount was used from your checking account today. Is that you? That's the fraud department notifying you that something unusual is going on with your account. You can say no on the text message. That means it's not me. Then they stop that whole process. Say yes, that was me. I did something unusual today. Then they just let it go through as normal. That's just an example of how text messaging has become very popular and active with your relationship with the bank. We've talked about your cell phone. There's a mobile app for almost every bank, and you can do virtually everything you can from a computer. As you start to become 18, you get a credit card or two, you'll find on your phone there's a wallet, and you can load that credit card into your wallet. And without having the credit card in your hand, you can just swipe your phone over a point of sale, and it makes a charge on your card and pays for the merchandise. Okay, I'm going to take you through this, and hopefully it will become a habit you'll pick up. This is making sure your records are correct. We talked about this little register where you write down everything you do with a checking account through the month, and then at the end of the month, you kind of take this register and you take the bank statement, probably not paper, it's probably online, and you see if the monies you put in and the money you use, and look at the fees that the bank charge you. If they all come out about the same, then it's called balancing your checkbook with the bank. What do most people do? They go into Walmart, they use their debit card. On the way out the door, they throw the receipt in the trash. Actually, a lot of people do that. There's nothing super wrong about it. So what you're doing now is trusting the bank to be correct about your bank balance at all times. You kind of lose control of that, but it's kind of up to you. I'm old school. I actually do balance my checkbook, but many people do, as I just said, they're kind of trusting the bank to be correct. And most of the time, the bank is going to be correct. But I want to just know about that process. It's pretty easy. This is an oversimplification. Started the month with $210. You didn't add any deposits that month. You did withdraw $25. End of the month, you have $185. It's really not a difficult thing to do. It has to really become a habit, though, for someone to stick to it. If you find an error with the bank, let them know right away. Sometimes you'll have to send them a letter. Here's another question from a student. Why do you need a checking account if there are apps like Venmo, PayPal, Cash, and Zelle that let you pay for things and send money to others? Well, it's a good question. And they've become very, very popular. Venmo, PayPal, Cash, Zelle are, in my industry, called P2P, or the person-to-person money movement apps. They've become very popular with young adults and teenagers. They are designed for you to send money to people that you know very well, your friends or relatives, because it doesn't take a lot of information, your cell phone and an email, your cell phone number and an email to send that money. And so you want to do it with people that you know. With a cell phone number and an email, you can send money to a friend or relative. You only use these apps for you know, because once the money's gone out of your account, it's gone. So they're convenient, they're easy, they're popular. Be careful. These apps are not banks. They are starting to offer many of the same products, and they use partner banks to do that. To the partner bank is a chartered bank with the state or the Fed, and they basically have all the protections that we've talked about that you get from a bank. So they partner with fintechs. All these companies are fintechs, and so when something is requiring bank security or bank safety, or there's a credit card issued, debit card issued, it has to be a partner bank to do that. So you will need a bank account to use these apps. Here's a little example, another cartoon. This is someone who's putting a check deposit into an ATM, and they're not putting in the ATM. They're getting ready to go in the bank, and they see the line is out the door, but they want to get their cash and go to lunch. So they go back outside to go to the ATM, deposit the money, and they're good to go. Here's electronics making it made more convenient. That's why you don't go into a bank all the time. So today let me sum up the chapter. We've covered the benefits of using a checking account and having one, types of checking accounts that are available to you, what you go through to open an account, how to write a check. We've overviewed overdraft protection programs, using ATM and debit cards, making deposits, withdrawals, electronic banking, keeping records, reconciling your account. There's homework. The next class is on financial planning. What we'd like to ask you to do is keep a diary for the next 7 days of all your spending. Every penny counts in this assignment. It's the money you spend on anything from the moment you get up until bedtime. Bring your diary to your teacher or email it the night before if you're not in-person class yet. And then we'll be talking about where your money comes from and where it goes in the next class on financial planning. Thank you.